Good evening, I'm Giuseppe Basile, I'm the Real Trader. You can find the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening, today is August the 6th now. It's actually 1:30 a.m. in the morning in Toronto, and I'm actually recording this brief video. It's a daily update for tomorrow, and I'm going to review only two markets, the euro dollar and the US dollar versus the Canadian dollar. Particularly this second forex pair I'm reviewing for a friends and follower who asked for this. So I'm going to review these two markets. So starting from the euro dollar, you will remember that I mentioned this area of support 133.76. It acted as support and enough to bring price into this first area of resistance. This area of resistance starting at 134.34. It's an extension long on the daily time frame, and I mentioned that we would see continued participation on the upside and possibly into the all the way halfway back from highs at the beginning of May to lows here beginning of August, only if we got price above 134.51. That never happened, and this market gave the opportunity to enter into a free risk trade once the sequence of measure move higher broke just after testing this area of resistance. So that scenario, which is a high probability scenario, did not materialize. A lower probability scenario materialized. Now I have to remind you that this market has actually a second target below. So the reason why the market is moving is because program trading on the weekly time frame, and you will remember this setup I gave at the beginning of July, 136.70 had a first target that we hit last week, and still has a second target. So let me remove this other level that never came into play. So the second target for the larger time frame is 133, as you remember. So at this stage, what we're going to see, we're either going to see this market moving lower into this area, and there would be a second target. So at that point, there would be profit taking both from this entry short and the larger entry short here. It's also possible that this market just reverses here. We don't know that. So we know that there is a target below. So that's a possibility for this market. If that happens, then we will look for a retracement this time from this level. There is going to be an extension short. Moving to the US dollar versus the Canadian dollar. I mentioned this area of resistance, and I also mentioned a potential area of support. So now this market is moving in measure move higher. So it was a short when he actually touched this level, and as you can see, there was some sort of participation on the downside, enough to have a free risk trade, but only with one of the entry techniques, let's say the common normal entry techniques that I always provide, would have produced a stop here. Now when it comes to these positions, we have to try always to get a free risk trade, and that means that we exit out of the trade once we have an entry, once we have a gain which equals risk, and that's called a risk-free trade. I also advise to not risk more than 1%, and there's no reason to risk more than 1%, because you want to be defensive with your own money, you want to be aggressive with so-called market money or other people's money, so the money that you win from on the market. So there is no need to risk a lot. When you become consistent, then you can get greater and greater risk on other people's money, not on your money, So this is a very important concept. Now, specifically for this trade, I was looking for a retracement into this area. As the market is in longs, of course, shorts can only be confirmed when a level is pierced. So if we now look at the daily time frame, we have to retrace this level, and this level again is for a long. So if the market retraces, program trading is going to be found at this new level 108.84. If we look at the smaller time frame, we can see what happened and how program trading has actually changed the level that they are going to follow. And that sometimes happens because the market can move in 4 different ways. Typically I show 2 ways the market can move, but there are other 2 ways the market can move too. So you will remember that in this 4-hour chart we had this measure move, which is the one that is showed here, and we touched first and second target. However, so as I mentioned on the daily before, we were looking for this retracement or this retracement until after the second target was touched and price went well above it. As you can see, this level never traded. So what is the level that traded? We can only identify the level after the fact. That's why it's always very important to wait for confirmation or trade on very small time frames. So what happened here is that the market and program trading changed the anchor, and we didn't know that. We could only identify that after the fact. And as you can see, the anchor that is being used at the moment is still a long anchor. It's different from the one that program trading typically uses. A reason for that: program trading has aligned the new situation on the euro and on the dollar. The euro dollar, we saw that just continued lower. So we were waiting for a larger bounce, but that didn't happen. And so with a stronger dollar, program trading had to adapt here, and that's exactly what happened. So when that happens, we can actually realign to it. And as you can see here now, this area of support has participated again. I'm not claiming that I saw this area before the fact, and in fact I couldn't trade this. And however, when we identify this new level, that's very important, because now we can keep following what program trading is doing. So this is an extension long. So the first target at 109.54 has been touched already, and the second target 109.95 is actually a level that could be actually reached in the coming days and within the week. So we have to adapt as market continues. Would it be possible to identify this before the fact? Not easy. 1 inch was given by the euro dollar, and the euro dollar actually just continued lower, but continued lower on a well-formed extension short. So we are I'm showing you the euro dollar 4-hour chart, and we can see that this market actually has been driven by the retracement that we had from the lower level. So basically this market is continuing moving in extension short. Now again, I mean, this market has a second target, so it stopped in that area that we identified. So one way we could trade that area is to move to the 15 minutes and actually look at when that the time frame failed actually. So the measure move in that time frame failed, and there is always a measure move, and we can see it here. That was not simple to see here, but it's still, and it's always there. And as we can see, there was an eye to high. It didn't work initially, but we knew that the resistance was much higher. So eventually this area started working and brought price into first and second target. And so after that happened, we could actually even play the sequence of measure move, traditional measure move here. And as we can see, we had the support at 134.08 with first target hit, and then as soon as the second the subsequent measure move failed here below this 134.20, then there was an indication for was a first indication of a failure of longs, and then we saw actually the market on the 15-minute time frame trade the first measure move short. So that's the way the market works, and we have to be very careful and do not risk more than 1%. There's no need to do that. You want to be defensive with your own capital and be aggressive with other people's money. I hope this helps. If you have any questions, shoot me an email, post a comment on the blog, and tomorrow I will send the newsletter, and there will be an important article just on this, on money management and risk management, and what is important in when it comes to risking your own money. Thank you very much for your attention, and have a great trading day tomorrow. Bye bye now.